equitystrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Thursday, May 29th. Coming up on the economic calendar today at 12:30 GMT, we have GDP data from the United States. This is first quarter GDP and is expected to come in negative due to bad weather at the beginning of the year. But if we have something unexpected happen here, we could see some significant volatility in equities. At the same time, we have current account balance from Canada, which could generate some volatility in the Canadian dollar. And also at the same time, we have employment data, weekly employment data from the United States, as well as personal consumption, all these data releases at the same time. Then at 2 o'clock in the afternoon, we have pending home sales from the United States, a key component of the American economy, so we could see some volatility there. Then later in the evening at 11:05 in the evening, we have a private consumer confidence survey, which could generate some volatility in the pound. And then at 11:30 in the evening, we have inflation data from Japan, which could generate some volatility in the yen. Moving over to the markets, the S&P 500 yesterday moved on the downside by 0.1%, which is which is part of our expected correction here. During early trading in the Asian session, we had Asian stocks continue to move higher. May has so far been the best performance for Asia since September of last year. This is on continuing optimism that the United States economy is continuing to recover, and the possibility of intervention by the Chinese government to support the Chinese economy. Going into the session today, S&P 500 futures are trading up by 0.1%, indicating a positive outlook for the markets today. The euro continued to move on the downside yesterday. It's just above support, which we had here at 135.80. Below that, if that level doesn't hold, below that we don't have any major support here until 134.80, so we have a pretty strong range here. However, RSI is showing that this currency pair is significantly oversold, so we could have a short-term rebound towards 136.60, which is our current resistance level. This is leading into next week's ECB policy meeting on Thursday, where the investors are expecting the ECB to do something about inflation concerns in the Eurozone. The pound moved below this trend line that's been maintaining for several months now, this relatively long-term channel here. We'll have to see a close below this level today to talk about a breakout here, but for the moment we have support at it's a relatively weak support here at 166.60, and we're looking at resistance at 167.80, so we also have a pretty broad range in the pound for today. The yen has been gaining some strength against the dollar, pushing this currency pair on the downside. We're still looking at a range of 101.25 to 102.25. And finally, we have gold, which continued to move on the downside. It's just a hair below our previous support level, which we had at 1,260. If that level doesn't hold, we have 1,240 as our next support level. And we still have resistance at 1,280. It's also good to point out that this move to the side here that we had, or the general strength in gold, has largely been propped up over concerns of the situation in the Ukraine and tensions with Russia, which created a risk environment. So now that risk environment or the tensions in the Ukraine are sort of sorting themselves out, we could be looking at gold returning to its overall downward trend, which was the initial expectation since earlier this year. Anyway, that's it for today. Thanks for watching and happy trading.